everyone. It's Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule events for Wednesday, February 3rd. Well, just looking at what's happened overnight, the Caixin Markit China Services PMI rose solidly in January. This pushed the composite index back above 50 and alleviated some of the fears about a slowdown in the country. The game plan for China is for domestic consumption to replace exports and investment as the main engine of growth. So, as long as services are expanding to take up some of the slack as manufacturing contracts, the country can segue into the next stage of its development. We hope. The Australian dollar gained a bit as a result, but with oil prices unaffected today, I don't think the bounce will last. Now, there are a few other important indicators coming out later today. Following yesterday's disappointing UK construction PMI, the UK services PMI at 9:30 GMT may be watched more closely than usual. It's expected to be relatively constant at 55.4, down only a bit from 55.5 in December. It's not the most volatile of data releases, but an important one nonetheless, given the importance of the UK services to the UK economy. Then at 13:15 GMT comes the focus of the day, the ADP non-farm employment change for January. The ADP report really isn't a good predictor of the non-farm payrolls, but it's the best simple one that we have, so people watch it closely anyway, and it does move the markets. Now, it seems a little ironic to me that economists try to predict the ADP report, which is only useful in trying to predict something else. In this case, the market's looking for a rise of 193,000. That would show some payback from the unusually high 257,000 last month. A number like that would probably be seen as reasonable, though, and so be supportive of the dollar. Then at 1500 GMT, we get the U.S. ISM non-manufacturing PMI for January. Like a lot of recent U.S. data, December brought a lower than expected reading of 55.3. It's expected to drop a little to 55.1 as the U.S. economy cools further. The market will be wary of anything weaker than that. Half an hour later, at 15:30 GMT, come the weekly U.S. crude oil inventories from the Department of Energy. This indicator was just largely ignored by everybody except for oil traders, but it's now watched very closely by everyone for its impact on the oil market, the stock markets, and risk appetite in general. I don't usually mention weekly indicators in this video, but I just want to draw your attention to this one, as the price of oil is driving everything else in the financial world nowadays. Inventories are already at a record level, and U.S. production is creeping up again despite the low prices, which is worrisome. Expectations are for a large 3.7 million barrel rise in crude inventories, which would be negative for risk and particularly bad for the Canadian dollar, I should think. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.